Hello and welcome to another update video about Polygon MATIC. Polygon still fighting here, with the both short-term bullish and bearish scenarios. Just to repeat again what I said in previous videos, first of all, there isn't really anything, let's say, long-term bearish about this chart until we drop below 47 cents. So this green area here, as long as we stay above that area, is a support area and protects the overall bullish scenario that should send us higher in a wave 3. What we can't say at the moment, are we already doing this, or do we get one more low here and will move up then? That's currently unclear. The current expectation is that, or assumption is, this here was a wave 1 which peaked at around $1.05, and then we have the possibility that this was a wave 2 and we are already in the third wave. I don't primarily believe this because this move up currently is not very strong and very bullish. The other possibility is, yes, this was a wave 1 and we are still in the wave 2, just in a more complex pattern. And we would move up in a wave 3 after we hit for a second time my target area. We did already reach it here, which was a reversal area. So the price adhered to it and has reversed. The question is just how sustainable is it, and are we already moving up or not? And we've got a few things to talk about here. If we assume wave 2 hasn't been in yet or isn't in yet, and it will be made later, and we come down once more lower, then ideally we have to turn around below 95 cents, 94 cents, because this, if we break above this level, it would be considered a breakout. Which would basically make the move down less likely. At the moment, I assume we are in a very rare, it's actually a rare pattern, WXYXZ pattern. That is still possible even though we moved higher here. It's a very rare Elliott Wave pattern, and therefore obviously needs to be taken with some caution as well. But it would assume we will come down once more lower, maybe into the region around 60-65 cents to make that wave 2 low and move higher. Why do I assume that? Well, I assume that because since the low was made here, which is the other location or position where the wave 2 could have been in, after we moved down here and reversed, it didn't produce a clearly bullish impulse. So if you look at the price, you see a very, very choppy price. It looks a bit similar to here, where we came down once more. It fits very well the sort of short-term bearish count. And it's just this up and down, and it is not clearly bullish. It's not an impulse. You get away with counting it as a diagonal pattern where you can have a lot of overlaps. But the problem is, if you look at this, you're also in a so-called ascending wedge, which is generally to be considered a bearish pattern, which would normally break out to the downside. Of course, not guaranteed, but we don't yet have a breakout, as you can see here. We don't yet have a breakout, and even if we have a breakout, a confirmation level that we are going higher would be the 95 cent level. So unless we really go above that level, we have to still assume lower prices, okay? So the blue count is the, let's say, alternative bullish count, but it would be based on the idea of a diagonal, that we say we had a wave 1 to the upside, a wave 2 down. That move down was lower than ideal anyway. Then we are now in the third wave, moving down in the fourth and moving up in the fifth. And because of the choppy nature of this price action, I would have to wait until we see those 5 waves as complete to really confirm we are in a bullish breakout. These 5 waves would then be most likely they would form the first wave of the third wave. So if this was the 2, the wave 3 will be somewhere up there. We can reach around the 180 level in that third wave. And in this third wave, you get obviously your 5 subwaves. So these 5 here would form the first wave of that third wave. So there will be more to come, and there will also be, if this is the first wave, there will be a wave 2, which would be another stronger retracement, which could be used as a possible entry point. yeah, depending on how low we go. I can't yet tell you how low we will go because I do not know exactly where the wave, where those 5 waves will end. Yeah, it should be above the $1 level generally. Yeah. First of all, we need to break 95, and then we have to break the $1.05 level, and it should be above that level somewhere. Okay, so at the moment we are still in the pattern here, not very clear about the direction, need to have a bit of patience to get some clarity. 95 cents is the breakout point, and should we already break below the previous swing low here at 78 cents, then I think we're already coming down in the C wave of Z of 2. Which will then give us another possibility down here to turn around. Okay, that's my update about MATIC. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye bye.